Here's why I think we could be seeing Fed rate cuts sooner than anticipated, which would result in lower mortgage interest rates. I'll tell you next. So the Fed has been in a rate hike cycle, hiking rates 11 times over the course of the last few years to slow down the economy. Now I believe the Fed rate cut cycle is imminent. I do not think there's going to be a rate cut in the next Fed meeting in July. However, I do think we could see our first rate cut in September, with possibly another one in the November or December meetings. The Fed target for inflation is 2%, and May was a solid month for inflation not increasing, so positive news on that front. Although elevated inflation is not the only risk that we face, there has also been a slowdown in jobs reports. For the last 5 months, we've seen major revisions due to agencies consistently overstating jobs. The unemployment rate was as low as 3.4% in April 2023, but it's as high as 4.1% currently. So we have also seen a steady increase in unemployment rate, which is usually a recession indicator. On top of that, GDP estimates are a reflection of our economic growth, and those have been reduced to the tune of about $400 billion in our economy, so pretty big decrease there. And lastly, consumers are feeling it. We're starting to see spending slow down big time. Retails came in way too low, and wages are certainly not growing fast enough to keep up with the cost of just goods, consumer goods. So we're all starting to see in all measures of the economic indications of a recession. On top of that, we have seen the European Central Bank cut interest rates last month. The Bank of Canada cut interest rates last month. The Bank of England is signaling they are likely going to cut interest rates in August. And Wall Street is projecting Fed rate cuts as early as September, November, and December. So Wall Street has increased their expectations of a Fed rate cut by big time. So I think the Fed rate cuts are coming. I think mortgage interest rates are going to continue to decrease. We're going to get closer to the lower sixes on a 30-year fixed and possibly into the fives. And I will share with you later as to what that means and how we should react. If you're in the housing market, whether you own a house or you're looking to buy a house, expect property values to continue to rise. So hopefully that helps. Use my team as a resource to get the answers you need. If you know someone looking to buy, build, renovate, refinance, or invest in real estate, consolidate debt, or roll over an old 401k, let me know. Head over to meetupwithryan.com and schedule a time to talk, or go ahead and get an application rolling at fundedbyryan.com. Hit me up if you have any questions and I'll hook you up.